Hi, this next episode with Alan Demers is going to be fun. Not often we get someone who's been 25 years plus with the top 10 national property casualty carriers, and he get to talk to us about his experience, right? From first step into the journey into the insurance world to how he grown over the years. And then after he left the company and now he got himself into the consulting world and he's now advising founders of the InsurTech world. So it's gonna be a fun conversation. Listen to Alan about his path and what he's working on today. Hi, welcome to this show. Welcome to the show of Industry Voice. Today we have Alan Demers on the show. How are you, Alan?
I'm doing great today. How are you, Jeff?
Great. A colleague, mutual friend of ours, recommended you to the show, and I'm excited to have you on. And you are in the world of claims, you are in the world of innovations, you're in the world of consulting. And a lot of people don't know this, but there's a massive amount of people in the insurance world, in the consulting world, right? But everybody have like their own niche they consult on. And you have a specific niche to what you consult on. And I love for our audience today to hear about all those things that you talk about. Industry voice is about people who have authenticity in their own community and they have their own knowledge in their own niche. So love to have you on this podcast, just talk about that. And also, if you can bring us back, just bring us back to how'd you end up in insurance? How'd you get into insurance? And what's your career like going through it? So I'm going to turn the mic over to you. And if you can just give us the background.
I started my career right out of college,
Yeah.
doing a little bit of retail work and realizing quickly that I wanted more out of a career. So at the time, Aetna, which is now part of Travelers Company, was recruiting, and I started as a trainee handling claims and very basic stuff to begin with, handling towing and glass claims and learning my way through the business. And I spent 10 years with Aetna, just working in a number of different capacities, growing my claim knowledge and into management, into their home office and working as a consultant before I made my next move. And the quick story on Aetna Property Casualty, they've been around for 100 years and then became a healthcare company. So they sold the property casualty business over to Travelers. And that's how we know them today.
And then what led you to the company in Columbus, Ohio, nationwide? I saw
Yeah,
that
so
in 1995 you went over there, right?
yeah, 10 years is a long time, and I probably thought I would stay with Aetna for life because I loved it so much. I had tremendous number of opportunities. I moved around from the Northeast where I grew up down to Florida and then back to Hartford, Connecticut, and had a number of different positions and growing throughout all of those. So at that time, I probably would have stayed with the company. But the last year really became an eye-opening experience is when you go through an M&A and you're on the employee side, we really experienced pretty much a shutdown of everything that we were trying to advance. Things just stalled, all waiting for this merger to go through. Anyway, long story short there, at the same time, Nationwide was growing and Nationwide was recruiting as well. So I joined Nationwide and started up their quality assurance program. And that was a great opportunity starting in the Northeast and then moving around with Nationwide for over 2 decades in a number of different roles, working my way up finally to an executive position in claims as a vice president.
I'm looking at your LinkedIn. It says you started in the cat claims.
Yeah, one of the roles I had early on with Nationwide was National Cat Director. And at the time, that wasn't a very sophisticated organization. This was now probably around 1997. Cat response was much more episodic than it is compared to today. So for those that are focused on climate change and how weather patterns have emerged, you maybe saw a catastrophe every several years, or at least it moved around from earthquakes on the West Coast to hurricanes on the East Coast. And so the CAT team during that stint was really a volunteer program. And part of my job was to marshal the resources from all the various regions to keep the reporting and information flowing. And again, not a very sophisticated response. But quickly, after we started to see the cadence pick up, so we needed more capability. We needed a national catastrophe team. We needed just a better response overall. So those are some of the areas I worked on early in my stint with Nationwide.
Going back to your stay at the CAT, and I just want to bring this to our audience because nobody talk about CAT teams, and they're such a big part of insurance claims. Was there any big natural disaster event that you remember vividly? Like you were like, that was the defining moment of the CAT team?
Yeah, it's funny you say that because starting my career off, I think a lot of adjusters were hoping for their first opportunity to go to be on cat duty. And not only did it pay well, but it was a great experience. And I remember I missed the first hurricane, I think it was Hugo uh, in North Carolina. And I kind of felt disappointed that I missed that opportunity. So I was looking for the next one. The first hurricane response I went to was Hurricane Bob that hit the Northeast. That was like 92, I want to say. I can't remember the exact year. But anyway, that it was an enriching experience. But, when I was National Cat Director, we didn't have a single big storm because I did that role for about a year and a half, 2 years. But what we did get was a pattern of spring storms that were hitting the central part of the U.S. And I remember I was on the job for about 2 days, and the president of claims at the time called me and said, "Hey, what's going on in Tennessee, and what's the claim count and all this other stuff?" Well, back in '97, you didn't have the kinds of things you have today, including the Weather Channel and the reporting capability, and so everything lagged a little bit. So that was lesson number one. You really had to be on top of everything that was happening from a national picture, because when something happens, the first thing the executive team wants to know is what's the impact? How much is this going to cost us? What are the damages? Early prediction, really is important in that space.
Yeah. A lot of things have changed with technologies over time. So you stayed at Nationwide for 24 years, and that is a long time for corporate America. I mean, it doesn't matter insurance or just corporate America in general. Um, Today, I think the world has changed a little bit versus average stay at a company, but 24 years is a long time. You probably learned a lot. And when you left corporate America and then you start getting to board members, advisories, advisor roles, can you give us, because we have like a lot of audience are probably going to be walking through that in the next 3 years, right? Like there's 500,000 people retire in the next 2 years or 3 years. And how did you keep yourself busy and still enjoy and challenging what you do every single day?
Yeah, it's a pretty significant transition from working in corporate life to going out and starting your own business or building your own brand or whatever that might be. I would highly recommend that, for anyone that's thinking about it, to start laying those tracks early and often so that when you do make that change, you already have some progression under your legs. 24 years is a long time, and wasn't all that unusual, and still isn't that unusual today, where you see people have longevity. And what kept me going all those years was about every 2 years I'd have a different role that I took on. So I always felt like I was doing something new and different, including my last position. And that last position probably prepared me the most for what I do today. So, the typical career where you move up and now you're head of claims for various business units. And so I went from non-standard to commercial agribusiness. At one point, I had a big part of the personal lines and small commercial. And then you kind of hit a plateau. But the last role I had was innovation, and that was really twofold. One was starting up innovation for claims, which is a brand new role, and then corporate innovation and trying to help what the company agenda was. And in that position, I faced off a lot with the startup companies. This was around 2016, so that was a really hot time for InsurTech and innovation. And so I did a lot of scouting. I worked with the venture team at Nationwide to look at different prospects for investment. So that
If,
really
if you if you
my eyes.
can, let's just dive into the venture team for a second, give our audience what that is, because a lot of people don't know Nationwide have a very, very good venture team. Thank you for all your support to our channel. Here's a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
Yeah, the corporate venture team, really their purpose was to make investments for, revenue, but also to find partnerships that may be a good fit for the company and using their technology. And so, they had a pretty wide palette, but a pretty deliberate approach of how that would fulfill that mission. And, getting the opportunity to sit in front of different startup companies and hear their story, and then offer my, opinion on how that may play in our business was pretty exciting. It was like the Shark Tank, perpetual Shark Tank opportunity. Sometimes you're right, sometimes you're wrong, but we really had some excellent, interactions. And again, the piece that I picked up the most through those conversations with the startups was that they had good technology. They were really, extremely bright, talented people, had good backing in most cases, but sometimes lacked the insurance expertise, the insurance knowledge. A lot of the founders weren't from the insurance industry, which is probably, really important. But also at one point in time through their journey, the startup journey, you need that insurance expertise, and you need a guide and someone that's going to help you find your way. And that's a lot of what I do today.
So it was in those pitch rooms, you hear the founders talking about their technology. You're like, you need insurance advice. You're giving us tech advice, but you need insurance advice.
Yeah, and I saw that
makes sense.
really pronounced in the claim space, which was, again, what I always appreciated about the founders and the companies that probably came from outside the insurance industry is that they brought a fresh perspective, and they weren't anchored by, these rules and regulations and all the hurdles that you would naturally see for someone that's been in the industry for a long time. So that was great. But, maybe if there was a con, it was how to speak the language, how to bring the credibility to the table. So when you go to knock on the door of a large insurance company, say, I want to talk to the head of claims about this solution that we have. Well, you really need to be able to speak their language and understand their problems and priority of things and how that's going to fit in. And that's the gap that I saw and thought there's something there. So I built my idea around that, and that's where the name InsurTech Consulting comes from, which I spent a lot of agony, how should I even name this? Should it be my name, Alan Demers? Should it be something like initials or an acronym? But the idea of InsurTech was really just that, was to really appeal to a number of these burgeoning startup companies in the InsurTech space. Ironically, though, the clients we serve, I'd say more than half of them are well-established companies that are not startups, and we can talk about that some more, but that's how it all began.
So what year did Nationwide Ventures roll out?
Yeah, so they had a pretty wide palette in terms of what are the right kinds of technologies at the right time. So for example, I remember early on, this is probably around 2016, and this is public, so I don't mind sharing it, but we looked at a company called Betterview in Palo Alto, and I was there with the team, and we actually saw their pitch and their little company headquarters at the time, and they were very focused on aerial and really the drone. I'd say it was drone mania for a while, and just like it was for other technologies like artificial intelligence is today, the focus on drones was, through the roof. No pun intended. Everybody wanted to, do something with aerial and drones. And that's really evolved some, as you know, and it's a terrific tool But what was really important was the data that was coming from the aerial imagery, no matter how it's captured. Anyway, so yeah, that was a good example. So I'd say that their agenda changed over time, depending on what was emerging and what was happening. But that's just one case. And they ultimately invested in Betterview, and the rest of the story is Betterview's now merged with Nearmap. So a highly successful organization, and that was one of the winners of it.
Corporate venture capital makes so much sense that they have these funds they can use to invest, but they can invest in theses that make themselves better, theses that they see themselves growing in. And Nationwide been doing this for a while, to my knowledge. And 2 years ago, I saw State Farm roll out their model. And when they rolled out the gate, they had massive recruiting going on for people who are just doing biz dev and go out find founders. And I think they came out of the gate recruiting 10, 12 people, just scouting deals, scouting new founders, new innovations. And that was only 2 years ago. And I think Nationwide was ahead of the curve, one of the first out here, to my knowledge. I could be wrong.
Yeah, there's several that have been really successful. Mass Mutual, Liberty,
yes, Mass,
USAA, State Farm. All of them have some type of corporate venture program. I shouldn't say all of them, but many of them have AmFam. Now stepping back, and we could spend the whole topic of discussion here, but we probably shouldn't. But now how do you measure success? Much like AM Best tried to measure what has been the progress of innovation in the industry, and how do you even create benchmarks for that, which is very difficult. How do you step back and say what's been the true success of the investment portfolio? Yes, you can look at the dollars and cents, but has there been other material impact to the organization? And I suppose all investors, they can give you both sides of that. So there are obviously some winners and losers in that mix. But what has it really done? I happen to be a fan of what happens in the corporate venture space, because I think the insurance industry is the biggest beneficiary of the InsurTech movement. So putting their money where their mouth is really matters. And so it's been a terrific ingredient in this whole ecosystem.
So a lot of people talk about InsurTech 1.0 to InsurTech 2.0. You advise founders on InsurTech founders, and you talk to them on the claim side. You've been doing this for 5+ years. How do you see the founders and their thesis evolve over the last 6 years, 6 years?
Yeah, I would say, and I would even extend that back further to when I was in the innovation space in 2016, 2017, say, it was really the Wild West. And the old cliche was all you really needed was an idea and a PowerPoint, and you could get funding. Right. And so maybe that was an extreme exaggeration a little bit, but it was somewhat true. And then that started to moderate somewhat. But what we saw from, say 2018 to early, 2020 and beyond was some redundancy. So we'd see a lot of the same ideas, same kinds of solutions, obviously different companies. And you knew at that point in state, of maturity, that things were going to thin out some. But I think what's happened today, both from the investment side and the adoption side, is a little bit tighter agenda. Yes, there's still room for the new technology and the new idea that no one was thinking about. But for the most part, it's how do we make the business better? And then, as you can imagine, and everyone that's looked at it, it's overwhelming still, the number of different solutions and the different providers and the way they use the technology. So it's an awful lot to sort through for most companies. One of the organizations I advised for was a top 20 insurance company as an extension of their innovation team. And I did that for almost 3 years, and really helping them scout and prioritize what's out there. What I loved working with that company was that they had an agenda. They were very deliberate about what they wanted to pursue. They didn't look at everything. They didn't attempt to. They had been through that cycle. But I'd say where we are today, it's coming closer, meaning that the startup companies are trying to find things that are really meaningful to the insurance world. But there's still a big divide there. There's still a, element of looking at the different technologies to see how it could fit and make their business better. And I would say the industry hasn't been able to find a real effective way of articulating, here's our business needs, here's our problems, here's our priorities and what we're looking for. Please help us. Some companies do it better than others, but it's still very much a, buyers looking for sellers, sellers looking for buyers type of market. And that's why the conferences, I think, are so important, and why there's always so much excitement for the next big one that comes up here in October, InsurTech Connect. So, people almost have a fear of missing out if they don't go to that one. And I think there's still this ingredient. We're looking for that next big thing, or what's been the next big development of the company I looked at 2 years ago at ITC or some other conference. So I still think that's what we're dealing with, but it's getting tighter and tighter. And then, maybe the other thing that's evolved here is, I think over the last decade, we've gone from a very, especially in claims, uber focused on customer service as a priority. And any claim organization tries to balance customer service, loss ratio, loss adjustment expense, and maybe employee satisfaction. So it's some combination of those big, pillars. And for an extended period, the focus was on customer service, almost to a little bit of the detriment of the loss ratio, meaning, we wouldn't put as much process into the claim and try to create a better, faster experience for the customer. And if it cost a little bit more on loss ratio, that was acceptable. Fast forward with this kind of insurance crisis mode that we've been in the last 18 months, indemnity and loss costs are front and center. So I think we'll continue to see more around predict and prevent, loss mitigation, more outsourcing of work and so forth. So I threw a lot at you there, but it's really evolving. I think to the benefit, and again, there's fallout from that, and we all expected that would happen because it was this bonanza of new entrants, and not all of them were going to survive. But it's in everyone's best interest that we still see these companies thrive and find a landing spot. And I'm sure we can talk about, adoption and sales cycle and how hard it is to get into, an insurance company to embrace that new company.
Over my few years observing, a lot of founders have the right idea. They might build the right tech, have the right IP, and a lot of area where they fail is distribution, is literally figure out who is buying their product and what problem do they solve and what is it worth. And I've seen fairly good amount of product that maybe didn't get to the success rate they could by not figuring the distribution part out.
Yeah, I see that famously. And it usually isn't that they're way off. Sometimes it's a problem because they're fairly close. In other words,
Yes,
almost like name that tune. You hum a few bars, you think you have it, you've got the right genre, you got the right artist, but you get the wrong title of the song. So they're really close. And that's actually more confounding. It's almost better if they were way off. And, every company should strive, and this is some of the help we provide here, is sometimes the right answer is getting to a no quickly and then understanding why there's a no response. But when it's like maybe, and yeah, we're intrigued and we want to look at this, a couple of things stand out. Is one, maybe they needed to continue to do their homework on the product, or two, they had to prioritize their suite of products, because a lot of startups offer more than one solution, or a solution that fits more than one problem or one business area. So, the upside of that is, yes, this solution could support claims and underwriting and pricing and maybe distribution, but then it's much more challenging to sell a suite of solutions across an enterprise. And I think the third piece is not knowing when to make that adjustment. And I mentioned that company Betterview early on. They're a good example of a company that made that change from the drone focus to the data and to their marketplace, and then maturing and so forth. I think it's really important and hard to get at. And this is again where we try to help, is try to get the voice of that insurance company, the customer, if you want to call them the buyer, and not only, why it's not a priority for them, but why, you know, why isn't it a priority? Is it not a right fit? Is it not the right timing? What's underlying? And that's hard to get at because it's a very polite industry. And we know all these stories of companies that come in, they sell them on the idea, they like it, they bring in more people, they have another meeting 3 months later, they still like it. Then there's talks about maybe doing a pilot. And if there is a pilot, sometimes that pilot stays in purgatory for 12 months before a decision's made, is it going to go in production? And so those stories are real and they happen all the time. But I think it's important to there's other ingredients to go along that way. But I think for any startup, they really have to understand, are they hitting the mark? Are they solving a big enough problem? And they taking away enough pain? And that'll get them higher on the priority list. And finding out what that priority is super important.
So I think I got a kind of a feel of what your consulting is like. You hold the founder's hand and walk them through the blind spots. And have you ever been on slide decks with founders say, hey, I have this idea, but I need to tell my venture guys that I have inside knowledge, inside experience of the insurance industry?
Yeah, definitely. And so that sometimes comes out. One of the first things we ask for when we talk to a new client is, can we see your marketing collateral? And let me just, step back from it and put some context around this. I think for the real brand new startup companies that don't have funding yet, we've done some work there, but, they're probably not ready for us because we do charge a fee. However, I have made some exceptions to that. There are a couple companies I work with today in more of an advisory capacity and have an equity stake in the company. But those are a lesser part of the work for obvious reasons. We're in the business of making money too. So once they're ready, I think it's usually when they have some funding and they may have been in the market or tried to go into the market. So we'll always ask up front, let us see your pitch deck. Let us see your marketing collateral, or if they've hired a business development person or part-time, where have they already been? And that tells us an awful lot. And sometimes it's just a matter of how they're speaking to the industry. And so I'm not a marketing expert by any stretch, but this is more B2B marketing where, I can certainly go back in time and look at my time in the chair and say, what would be appealing? What wouldn't be? Are they even identifying this in the right way? Really try to help them in that regard. And then certainly from a product, development, what's next on the roadmap. We try not to only give our insights. I think what's really helpful is leveraging our network so we can talk to people who are in the chair today, the head of claims that's in the chair today, or the person that's the head of underwriting. We can speak with them today and find out what are they thinking. And I think that's really important.
So have you had a time that you had to tell the founders, the company that you're advising, that they had to shut it down, or they should think about shutting down?
Yeah, I mean, I would say that we've ever been in a position where we've actually said shut it down. I mean, that's their decision, but I think we've helped them see what could be very obvious, and which may mean that they go in a different direction. I worked with a number of companies in that regard, and I won't name anyone by name because we typically don't talk about clients by company name, but I can describe a few situations. But, one company I worked with was a requirements management platform, and right idea, right problem, but the uptake just didn't happen. And this was more about changing traditional thinking of how companies went about their product development, their own product development cycle, creating an insurance policy or a new market. And it's done very traditionally through the various company, components like pricing and actuary and, marketing and sales, and everybody working disparately through email and meetings and so forth. Anyway, I think we came to a mutual understanding that was a really difficult place to penetrate. And then some of it's just patience, Jeff, too, because the other thing we try to tell people right up front is don't expect something to happen in 3 months, 6 months. We're typically looking at 12 to 18 months, sometimes longer. And so if you have the fortitude to stick with it, the reward is there. Now, the upside, of course, if you do transact with an insurance carrier, generally speaking, that could be a long-term relationship. It can be a 2-year contract that renews, so if you have the patience and the capital to withstand that waiting period, it can work out for you. But there's been a number of them, I'd say an equal number that have either found their first new client or they've grown revenue, as there are those that said, no, let's pivot or fold the tent or focus somewhere else. So there, yes, is the short answer, but there's a lot of those stories out there. And that's valuable to learn because, again, back to what I said earlier, the sooner you can get to a yes or no, I said it no earlier on, but I meant, get to a yes, no answer, the sooner you can do that is in everybody's best interest.
Makes a lot of sense. So a year from now, I want to have you come back on the podcast. What do you think the next year look like, and what are some of the comfortable goals you have for yourself and uncomfortable goals you have for yourself?
That's, always predicting the future is the most difficult. So, but it's also the easiest one to come at because, no one ever goes back and looks, you may, and say, what did they say a year ago and how did that pan out? I think if I had to look at the industry over 2024, it's certainly been a period of insurance crisis, raising rates and trying to restore profitability. That's been the key focus. It's probably had a dampening effect on investment and innovation and adoption of new technology. So we've definitely seen things plateau in 2024. I'd say the last few months, really probably since July, we're starting to see things pick up again. I think there's light at the end of the tunnel on the inflation scenario. I think the climate and weather stuff is always the wild card, but we're getting heads around that. The industry's been prepared to handle those kinds of situations. So I see a return to the table. Like I said, I think we'll see more and more focus on avoiding and mitigating and lowering loss costs. It has to happen because the answer cannot be continuous rate increases, especially on the consumer side, auto and home. It's really been incredible how much rate increase we've seen, and even though the average may be 5 or 7%, there's all kinds of outliers, even access to insurance. So the other thing I think we'll see is new products, big on parametric, big on anything that would help solve some of the out-of-pocket scenarios or the huge deductibles that policyholders now have. Just for example, we're seeing on the auto repair space that claim volume has come down a little bit because customers are consciously deciding should they make the repair or make the claim or not, or at least now, or should they wait? So those economic choices. So I think we're going to see more solutions solve some of those new emerging changes that are happening, and that's just the tip of the iceberg. And for me, is to continue to evolve and fit where I can. So, we've been working with a couple companies that are looking at those sort of things. So I think the computer vision type of capability that can help identify quickly what's that damage amount, should I make a claim or not? That's one scenario. Looking at crash detection, we've been working with a company that's really big in that space because the sooner you can identify if there's been an accident, you can respond with more intelligent services. So we'll continue to work within that framework. And a year from now, I would expect to be telling you that we've made some changes in the clients that we work with, and we're adding new value. But personally, and for the industry's sake, I'd love to see more emphasis on how we contain losses. It's the hardest thing to do, and more in the prediction and prevention space. And that's going to require more adoption. We could talk a whole lot about that, like sensor technology and some of the things that carriers are either experimenting with or starting to deploy a little bit more, but we need more of that. And hopefully we'll see more of that happen.
You know, I have another podcast called Founders Journey. So if you know all founders working in that space, you think their voice needs to be heard, you know, make an introduction and send them over to me. I'd love to have them on the show.
I think
So,
there's certainly a lot, there's more demand than there is anything, availability. And I think there's so many companies that just are out there trying to tell their story and want to tell you where they're at. So you can count on that.
yeah. Alan, thank you very much for coming on the show.
My pleasure.
And looking forward to have you back.
We only scratched the surface, so I look forward to the next one. We go deeper in a few other areas.
I agree. We should put a panel together and have a bunch of other consultants in the InsurTech space covering different areas. Just talk about the change, the trend.
Definitely. Thank you, Jeff.
Have a good one.
You too.